Good morning, everyone. Welcome to a pre-bell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst. Disclaimer for this podcast is that whatever stocks we discuss in this presentation are intended only for educational purpose, should not be taken as an investment advice. Let's look into Nifty's daily chart to get an overview of the general market, how the Indian market is placed, and we like to state O'Neill perspective as well. Currently, as you all know, Nifty is trading near its all-time highs, 18,600 levels. It has been reclaimed and it has scaled new highs recently, 18,008 above 18,800 levels as well. So clearly, we are in at an all-time high range. However, broader market indices, Nifty mid cap and small cap, are yet to scale new highs. They are still underperforming the general market. That is one issue with the current uptrend. Also, the volume on the Nifty index as a whole is also slightly lagging, which is not a good sign. We would want the volume to be on the higher side. You can see here volume in the last 1 month. You can see only few occasions volume is on the higher side. Apart from these few occasions, volume has stayed below average, which is not a positive sign on the volume front. Even though price action is looking very strong, but the volume action is not accompanying the price action. Always a couple price action with volume action to get a more concrete view on the market. So price action is looking good, but the volume action is not looking good. One pointer here. And also Nifty clearly, as it is trading near all-time highs, it is trading above its key moving averages. Short-term moving average is 21 DMA here, which is also upheld by the index, and it has not broken this level as well. And other moving averages, 50, 100, 200 DMAs are very far from the current market price. So definitely Nifty is trading above moving averages is also a positive sign for the longs. But as I mentioned, this rally has been fueled by large cap stocks such as index heavyweights, Reliance, HDFC Banks, HDFC Twins, and Infosys, TCS, and other major large cap stocks, which are Adani Group, has also been fueling the growth for the index. However, mid cap and small cap spaces are still underperforming, and most of the stocks are still below their 50 DMAs, which is not a positive sign. We want the broader market participation as well in the current market rally, so that the probability of breakouts will be successful in the current rally. Talking about O'Neill perspective, we are in confirmed uptrend. Confirmed uptrend is one of the market stages where our exposure towards the market will be maximum. Number of additions during this stage is also maximum, and the probability of success also is higher because the general market is doing good. Then definitely stocks will also do good. So whenever you are adding a stock on a strong breakout or strong buy point, definitely the probability of advancing 20 to 25% is higher when compared to other market stages. However, when the market is at new all-time highs, it's very important. We never know how long the market rally is going to happen. So it's better to formalize a few systematic ideations here, such as how to track weakness in the market. Uh, it helps us to identify almost near the top in the market. Distribution days help us to do that. Distribution day is when Nifty declines 0.2% or more on volume higher than the previous session. So it's a very important tool which we use at MarketSmith India, because otherwise, if you are not using any tools to identify the top, definitely if you are going by news or any other market indicators, definitely you are getting to prone to failure rather than getting succeeded. So always have a systematic approach in the investing, so that in the long term you are going to make good profits. So currently distribution day count is at 1, which is not a major sign of cautiousness. If the count increases to 3 or 4 and Nifty breaches its key moving averages, then definitely we'll move moving the market status to uptrend under pressure. In such a scenario, our additions will come down slightly. And talking about model portfolio stocks, in the model portfolio stocks, if there are any underperformers or which are any laggards, we'll definitely exit those and look for good breakouts. Some of the companies which are in news and which will be under radar during the market session today are Hindustan Unilever, which is a major FMCG company in India, has entered into agreement to acquire nearly 20% shareholding in Nutritionalab. This is for a value of 70 crore rupees. With this acquisition of 20% stake, this company is foraying into health and well-being category. Jyoti company has secured an order worth more than 21 crores. This is regarding irrigation project from Navayuga Engineering Company. ICICI Bank, a major private lender in the country, has raised 5,000 crores by issuing infrastructure-related bonds. These funds will be used for funding the projects going forward. Paytm, which has been under news after SoftBank exiting some of its shareholding, the company's board is about to meet on December 13th to discuss about share buyback. The company is planning to do a share buyback, and decision will be out on December 13th after its board of directors meeting. One other major news is Tata Group is foraying into chip manufacturing facilities in India. Recently, the chip shortage has been seen, and auto manufacturers are facing the heat because of chip shortage. If the Tata Group enables chip manufacturing, definitely auto companies in India will be on the positive side, especially Tata Motors, which is a part of Tata Group. Inflation for the FMCG companies is cooling off according to ITC's CMD. This is a very positive sign, and the company is also expecting rural volume to grow in the coming quarters. Yesterday, FIS obtained net sellers again, and they have sold more than 1,100 crores of equities in India, whereas DA is given support by buying more than 70 crores of equities in India. There was some respite for the US market, which has been falling for the last 3 or 4 trading sessions. US market closed on the higher end overnight. Dow Jones with 0.6% of gains, followed by S&P 0.8% and Nasdaq closing more than 1.1% higher. Asian markets are also taking some positive global cues. Kospi and Nikkei are trading in the positive territory as we speak, whereas Shanghai is trading flat with negative bias. SGX Nifty is also indicating a higher opening for the index. Nifty closed around 18,610 levels in the yesterday's expiry, and by going with the SGX Nifty, clearly it is we are expecting 150 point higher opening on the index. If the higher opening is sustained, definitely we might expect Nifty hitting all-time high again in the today's trading session. The chart of the day, we picked Bharat Dynamics. The stock is looking very good. It is about to break out from its consolidation base pattern. Another 4% from here, it will break out from the stage 3 base pattern. On the techno fundamental side, the stock is looking very good, especially on the fundamentals. If you look at sales growth and EPS growth has been very consistent, and it has been growing at higher double digit to triple digits, which is a very positive sign. Technical ratings also very strong. You can see RS rating of 87 indicates a strong outperformance of the stock compared to general market. Accumulation distribution day rating, another rating which is also very strong. Top class A plus is the toppest rating a stock can get. That is because most of the blue bars are above average when compared to the red bars. That means a strong accumulation is happening in the stock. The same can be reflected by looking at the number of funds invested. On quarter-on-quarter basis, the stock has been attracting new institutional funds, and which is a very positive sign. As you all know, these institutional funds will give support to the stock whenever stock is under pressure, or whenever the general market is under pressure, you can see stock has a very strong support at its 50 DMA, which is a red line here. More than a couple of times the stock found support at its 50 DMA. So you can keep any level below 50 DMA as a stop loss if you have this stock in your portfolio. And talking about fresh ideation in this particular stock, you can wait for another 4% move from here, and then you can take an gradual approach while taking initiating position. Thanks for joining today's pre-bell, and we have a small announcement regarding after hours. Today's after hours at 4:30 evening, which we do normally, will be the last after hours sessions which will be conducted, and we are planning to introduce a new format. We'll take a short break related to after hours session, and after coming back, we'll be coming back with a new format, and which will be like new format which we are thinking as a team. Uh, Thanks for your support for the afterwards in the last few months, and we hope to see you again at the Mondays. The morning session will be continued as usual, but the afterwards we are taking a small break.